Tonight we are going to discuss if Toronto is in a real estate bubble. New home prices continue on its record-setting sales pace, and the resale market sales are up 6%, and we just had the second best May on record in Toronto. But aren't we due for a slowdown, or are we in the middle of a housing collapse that's going to happen? Do you think prices are too high? Do you think we're due to a collapse, or do you expect prices to continue to go up? If you have a question or you want to get these questions, give us a call, 416-446-7090. You can also email us at insighttorealestate@rogerstv.com, or you could tweet me at Twitter, Brian Prasad. I'm your host, Brian Prasad, and with me is Jas Grewal. He is a mortgage advisor with the Callum Ross team, and we have Ben Rabideau, a real estate blogger. He's also instructor at Georgian College, where you teach psychology and financial planning. We also, on the line, on the phone, we have a little bit later, Ben Myers. He is the Senior Vice President of Urbanation, which tracks the high-rise market in Toronto. And we have Don Campbell, the President of the Real Estate Investment Network. He is right now in Vancouver. Thank you all, everyone. Is everyone here? Is Ben there? Okay, well, I guess I'm going to throw out the questions fast and furious right now. This is the season finale of Inside Toronto Real Estate, so no doubt we have to leave the viewers with the big show tonight. So that's why we have the most guests that we've ever had on a show, and we're going to be analyzing this bubble question from all angles. So I'm going to ask the first question to you, Jas. How do you recognize if we're in a bubble?
Well, it's interesting, Brian, with regard to bubbles. Most economists have a view that when you're actually in the bubble is actually when you actually realize that it actually happens. But I think one of the things that, from our past learnings, one of the things that you have to look for is a rapid appreciation in values over a short period.
Yes.
I mean, similar to what happened in California. Vancouver is actually a very interesting model because you had periods where you had over double-digit growth in appreciation year after year after year, which is a little frightening overall. For Toronto hasn't experienced all that. And if you look at the last 25 years, the average real estate appreciation is about 5.8% over that period. Mm-hmm. I don't believe that Toronto's really that in danger territory.
It's been consistent growth, not super fast, crazy growth.
And that's my point. I mean, one of the things is, if it's slow and steady up until that point, that's great. Mm-hmm. If you get periods where it's negative and then it goes up by 10 or 15% each year and it still averages 5.8, then we have something to be concerned about. One of the things that I think where a lot of consumers were going to have, maybe consumers should be fearful of this, is that it looks like in the near term, interest rates are going to still remain relatively low. With the American situation there, it's going to be very difficult for Canada, for the Bank of Canada to actually raise interest rates.
Yes.
That is going to allow more people to access the marketplace. That may continue the growth, per se. I mean, we're still looking at historic lows as far as interest rates.
So the Bank of Canada is between a rock and hard place.
Yep.
They can't increase interest rates because the world economy is still slow. Yep. But it's also encouraging people to take on too much debt. And with that, Ben, how do you know if we're in a bubble? Or how do you forecast if we're in a bubble?
Yeah, that's a great question. Well, first of all, I think if you look at just nominal growth, so you make a great point. So a house price in Toronto rising 5% roughly over 25 years. The question I would ask then is, well, how have the fundamentals that would underpin those prices, how have they compared? So for example, I would look at things like incomes, I'd look at rental growth, I'd look at inflation, I'd look at GDP. And when you start to look at those in the context of house prices, you see that in particular in the last 10 years, while house prices may not have grown phenomenally here in Toronto, they certainly have outpaced those fundamentals. Yes. And that starts to ring some alarm bells in my mind. So that's one thing. Certainly, you look at the rise in price relative to fundamentals.
So what fundamentals are you looking for?
Well, I think
GDP
certainly
growth.
That's one. Yeah,
yes.
Certainly GDP growth. And on my website, I just the other day posted a graph showing house prices divided by GDP per capita here in Toronto. And it's interesting, if you look at our current prices, we're well above what we might have called the bubble of the late 80s and early 90s.
Yes.
So, that starts to raise some flags in my mind. Another one is rental growth. The same fundamentals that should drive house prices should also drive rents. Certainly we have a cap on rental, how much you can raise your rents and so on, but landlords typically know how to get around that by renovating and so on. So rents closely tracked house prices, again, until the early part of the 2000s.
So you're saying the way that we recognize the bubble, if prices grow beyond the fundamentals. And speaking of fundamentals, I know Ben Myers, are you there, sir?
I'm here.
So you just published the Urban Rental Report, and you kind of showed that, at least with the new housing side, that rents have been growing. The resale market hasn't been growing that fast, but the pre-construction new condos have been maybe going up 8% for the past year. Are we in a new housing bubble?
I don't think so. Certainly, when you look at the number of new projects coming online, just the supply is tremendous. You know, we're looking at potential for as many as 9,000 units added to the new condominium market in the second quarter. Mm-hmm. So that's certainly going to keep prices in check. And like I said previously when I've been on your program, 7 to 9% is kind of where we've been at in the new condominium market over the past 5 years in terms of annual appreciation. So it is a little bit high, a little bit more than some of the fundamentals that the other Ben was talking about. But otherwise, I think it's pretty good. I mean, we're getting the 100,000 new people into the Toronto CMA every single year, and so we're going to need in the neighborhood of 40,000 new units to accommodate these people.
Thank you very much. And Don, I know you actively study the fundamentals across Canada. How does Toronto look from, I guess, from compared to other provinces and other cities?
What I find is the question is, how do you identify a potential bubble? And I think that if you just look out my window right here, you can see one. And that's what's forming here in Vancouver. Now, it's not a bubble per se, but now let's transfer that information to Toronto, and let's be realistic. There is no average price in Toronto. There's no average property in Toronto. And unfortunately, a lot of the pundits, a lot of the discussion is always around average price. Well, for instance, if you've got 2 brand new projects or 3 brand new projects that come on that month, obviously there's a higher percentage of new, and therefore it's going to skew the price upwards. I think that if you go into some of the older areas that, for instance, we took on that bus tour, for instance, you can see where the average price, quote unquote, hasn't moved like the overall average price. I think that we have to be very careful what numbers we're using when we're trying to identify whether there's a bubble or not.
Mm-hmm. And Don, what's your thoughts? I guess I'm going to throw it to you. Is Toronto in a bubble?
No, I don't think so. I think that we're going to have an oversupply in the new product, and then just like every market, that oversupply will get taken up as long as the market has the fundamentals. And the fundamentals that I like to start with is GDP, but I really want to see population growth, which we're seeing in Toronto, with 100,000 new bodies a year. Of course, net, it's a little bit lower than that. But once again, a market is a living and breathing entity, so it's constantly oversupply, undersupply, oversupply, undersupply. I think we're going to enter into what's going to be an oversupply market, but it won't be indicated by the number of sales because the lineups are still continuing for the new projects. Mm-hmm. But I think what you'll see over the next couple of years is that more difficult for the speculators to get out of the market, the guys that get in at pre-build and then sell into the marketplace. So I don't see a bubble forming. I do see a flattening of average sale prices.
Jas, I guess with you, you know what? Actually, we're going to come back to you. We're going to break. We're going to touch on more of these bubble questions. You are watching Inside Toronto Real Estate. If you're wondering if it's a good or bad time to buy, we have a few lines open. Give us a call, 416-446-7090. We'll be right back.